Hi everyone, it's Brittanyvires here with Keller Williams Realty, and today we're taking advantage of spending time with Alejandro Juarez with AMEC, and he's going to share some information with us about different loans and what they mean for you. So Alejandro, if you don't mind just sharing with us the difference between an FHA, conventional, and a USDA loan.
Yeah, I think it's important, obviously, right, for people to know the type of loan that they're getting into and to understand how each particular loan makes a difference in their, not just their short-term investment, what their mortgage payment is going to be, but what their cash to close is going to be, and then also how that loan is going to perform over the next 10, 15, 30 years, right?
Absolutely.
So the main difference, I would say, between an FHA conventional and USDA loan, there's three of them here, right? So between FHA and conventional, there's going to be a down payment. So usually or traditionally, historically, people have known conventional loans to require a 5% down payment,
right?
Which is not necessarily the case. There's a lot of really great conventional programs, Home Ready and Home Possible, that allow a borrower to get into a conventional loan with just 3% down. They have lower mortgage insurance rates pricing, so that's really awesome.
That's great.
They're fantastic programs, but they do have income limits, and there are certain areas in the counties that allow for those programs. So.
Okay.
Every time we have a client that we're working with, I always let them know, when you find the property that you're looking for, make sure you reach out to me so that I can look up the property and make sure that we can actually do Home Ready or Home Possible where they are located. That's step number one. We want to make sure we can actually offer them that program before we're getting too far ahead of ourselves. Aside from that, obviously, they're the standard conventional 5% programs. With FHA only requires a 3.5% down payment. Also, very low down payment requirement. FHA, I think some of the advantages with FHA lie in the fact that they allow for a slightly higher debt-to-income ratio, where you can have maybe a few more liabilities than you are allowed to have with a conventional product. Right. So with conventional, the maximum that you can hit is around the 50% mark. So if you have a certain amount of income, it can only hit a 50% threshold when you compare the liabilities to it. So I always tell people, if you're making $1,000 a month, you can only have $500 worth of debt total in the entire transaction, right, counting the mortgage along with all of the other debts that you have. Naturally, most people aren't making just $1,000 when they're coming to buy a house. So I just like to make that example so that people understand, okay, this is what the ratio represents.
So that you clearly understand.
Right. FHA allows for a little bit more. So that's really one of the best advantages of the FHA loan.
That is great.
The other thing I would add with the FHA that a lot of people don't realize is that although generally speaking, interest rates are going to be better with FHA loans, what's important is to understand, what does the entire loan package look like? What does my mortgage insurance look like with the FHA loan? Understand that the FHA loans will charge an upfront mortgage insurance. It's a two-part mortgage insurance loan program where you pay some upfront always, and you pay the rest monthly. And that monthly mortgage insurance will never come off on an FHA loan. It used to be back in the day that it did. After about 11 years, they don't anymore. So if you're in an FHA loan, it will stay with you forever until you refinance or sell that home. That mortgage insurance premium will be there forever. That is one of the areas where I think a lot of people get lost, because they'll be asked to do an FHA loan. They'll look at the interest rate and they'll say, wow, this is amazing, this is great. But they don't realize that there are a lot of other fees they're paying for. And that's really important for them to catch on and see a comparison. What does my loan look like if it were FHA? What does my loan look like if it was conventional? And then the last thing I would say, and I can talk about this for hours, but the last thing that's really important is just to understand that there are loan limits. FHA has different loan limits than conventional loan. I want to say the FHA loan limit is somewhere around 384 now. They just got updated. Right. And the conventional loan, I want to say, is at 453.1. And I need to look that up again. You can go to our website. We have the loan limits on there. They change from time to time. What's important to know is, if I can only get financing from an FHA loan, then I need to know what my loan limit is.
Absolutely. Absolutely.
Yep.
Anything else that you think is important for us to know, Alejandro?
I mean, like I said, I could talk about this stuff for hours, but I try to give an abridged version. It's important. I think the only thing that I would add is that it's important that no matter who you're working with, no matter what lender you're working with, understand your options. For me, that's the most important thing that I've learned from working in this industry, is that there are so many options out there, and I always tell my clients that there's so many ways to slice this cake. What's important is to understand what your options are and what's in your best interest. So I always want to have a conversation with my clients. I want to sit with them in this very conference room and find out what's more important to them: saving cash to close, getting the best interest rate. Oftentimes those they're competing interests when you're working
long-term,
right, exactly.
Short-term.
So understand that you have the option to work a mortgage in different ways, and then always sit down with your lender and look at what those options do to your investment, so that you have the power to choose what's best for you and your family.
Make sure you're educated. Yeah. Well, great. Thank you, Alejandro, for sharing all that information. I'll provide my contact info and Alejandro's below this video. If y'all have any more questions, feel free to reach out to either one of us, and we'll see you soon. Bye.
Bye.